Starting off with the stories from Uganda, NSSF has already released these numbers. And of course, to some people, it's a bit of distressful because the profits or income for the company has taken a beating. And there are reasons for this particular development. But most importantly, there's also impact for those that are saving with the fund. We delve into these spaces and try to find out what this development exactly means.
And how much have you lost? Because of the exchange. So in our particular figure, that figure was 402.
This is the National Social Security Fund Managing Director putting in context how a weaker shilling and the poor equity market performance across the East African region has cost the National Social Security Fund. Putting this in even deeper context, the loss is bigger than the entire value of the fund's real estate portfolio, currently standing at 310 billion shillings. The current National Social Security Fund Act bars the fund from investing outside the East African region, limiting its ability to transpire over the market vagaries, especially at this time when the regional bosses are posting lackluster performance.
Well, if you look at the trend hasn't really been a very good one in terms of, if you look at the prices there. If you compare, generally with the market in the region, I think, the Kenyan side, the NSE has shed a lot more than the Ugandan side. If you track the NSE top 20, it has been about 10% down since January.
Today, NSSF has a bulk of its investments invested in government paper, that is treasury bills and bonds, with real estate and equities coming in at the tail end of the share of its 11 trillion shillings asset base. The more tougher side of this development is the fact that NSSF will only afford to pay savers 8.7% interest, the lowest in the last 8 years, as opposed to the 15% it paid last year. To the fund's manager, all is not gloomy, as the fund posted some good numbers in some areas.
Collections. We had a great year of collections. We exceeded our collection target way beyond our expectation. Number two, interest income. Because of the long maturity dates, investments that we had made in the previous, we had locked in some really good rates, and therefore the amounts that we collected this year, we also invested in treasury bonds, and that's why our interest income was great.
It is a bittersweet moment for the fund because for a while it had contended with a tough macroeconomic environment driven by factors beyond its control, like the poor regional equities market performance and reduced return on government paper. It did post some good numbers on membership, collection and assets, which grew to 11.3 trillion shillings from under 10 trillion.